Hello, I'm Hickey from interest.co.nz and welcome to a special economic weather report brought to you in association with Bank of New Zealand. Today we look at figures on business confidence. The National Bank survey of business opinion, which is closely watched by the Reserve Bank and many in the markets, shows a significant rebound in business confidence in May from April. In fact, a net 38% of those surveyed now see better times for the economy overall in the next year. That's up a whopping 24 points from last month, and it's a recovery to well above the level seen before the Christchurch earthquake on February the 22nd. And in fact, when people look at their own businesses, they're also more confident. That's increased by 10 basis points to just on 39% net who expect better conditions for themselves in the next year. Now this is a good sign for the economy, and we saw the New Zealand dollar rise as a result to a new record high of 82.6 US cents. But what does this mean about interest rates? Some people are thinking if we've got a buoyant business sector pushing through growth in the economy and increasing prices, that increases the pressure on inflation and may force the Reserve Bank to unwind that big cut in the official cash rate that we saw on March the 10th, the emergency cut in the official cash rate. Well, in the markets, they are seeing an increase in the official cash rate of around about 65 basis points over the next 12 months. And that's slightly more aggressive than even a couple of weeks ago when people were talking about 50 basis points of hikes. Now, what would that mean? Well, the official cash rate's currently 2.5%. If we saw it up to, let's say, 3.25% by the middle of 2012, that means that floating mortgage rates would be up from about 5.75% now to about 6.25%. And we'd see the one-year term deposit rates, which are currently around about 4.5%, rise to just over 5%. But it's worth looking at what's actually happening here with business confidence. Now, you can see here from this chart that it was riding quite high before the earthquakes through 2009 and through 2010. Then it jagged down when we saw the earthquake in February, and it's bounced right back. In fact, above the level it was at before the earthquake. And when you look at the charts which show how business confidence, certainly confidence about your own business, compares with GDP, there does seem a close connection. And you can see here in this chart that over the years there has been a reasonably close connection between business confidence for your own business and what happens with GDP. But there does seem to have been a bit of a disconnection in the last 18 months to 2 years. And you can see here a big jump in business confidence through 2009 through 2010, but it hasn't really followed through in the economy. And that's the concern here, that businesses may be confident, they may be looking to employ people, but people aren't so keen to spend, they're looking to repay debt instead. So there we have it, a big jump in the currency to a post-float record higher than it's ever been since 1985 because of a rebound in business confidence. And people are expecting higher official cash rate, higher interest rates later this year, potentially starting to increase around December this year, maybe early 2012. I'm Hickey. That was a special economic weather report brought to you in association with Bank of New Zealand.